Okay, why don't we get started? Thanks very much, everybody. Once again, my name is Kenrick Sylvester, and it is my pleasure today to introduce VersaBank to the Wellington Altus team. So VersaBank is a Schedule I Canadian bank with a branchless B2B model that allows the company to drive loan growth at a lower cost than most conventional Schedule I banks. VersaBank has proprietary software that provides innovative solutions to both financial partners, which has led to industry-leading net interest margin of around 2.9%. So the stock's done well. Shares are up over 25% year to date, but it still trades at a discount to book value, despite growing earnings at a 30% CAGR over the past 6 years. So with us today is CEO David Taylor to walk you through the story. So David, thanks again for your time.
Well, thanks, Kenrick, and good to meet all of you. I see some familiar faces on the tiny bit of a screen I've got. Hi Ben. Alrighty, so I'm going to tell you, I'll advance to slide 3 here, and let me see. Isn't that neat? Your picture's in the way of my screen. There we are. I can get it.
I think you're on slide 30, David.
Yeah, I don't want to. Just be a sec, guys. I've got your smiling faces over top of the slider on the side, but not anymore. There we go. Alrighty. So I'm skipping past the advisory, which is the usual what you find on the back of some potent medicine. And I'm on slide 3. So what I'm about to do is to tell you a story about 2 corporations that I've created. One is Kenrick was referring to, the digital bank. It's a concept that I came up in 1993, and the idea was to create a branchless financial institution utilizing new technologies at the time, which were, seems archaic, IBM PCs and telephone modems, to create a simulated branch network, and thereby save a lot of overheads and be able to lend in niche markets that I thought were left somewhat not well served by the larger banks. So that's the digital bank, and the digital bank is finally, I would say, coming of age. 93 was way too soon, and most recently in the pandemic, it's sort of shown what it can do, whereas some of the other financial institutions across the world are suffering with various issues, operational issues, credit loss issues. Our bank ended the year with no non-performing loans, not even any loans in arrears, industry-leading net interest margin, and continued its growth trajectory. So did very well. It's now growing even more rapidly for reasons that I'll get into later on. So the other company we've created fairly recently is DRT Cyber, and DRT Cyber was created to look after the cybersecurity needs of the bank. And most recently, we plan to commercialize the capabilities that we built into DRT Cyber. And with an acquisition, we've got sort of the who's who in North America as a client list. So frankly, at this point in time, you can buy both these companies for the price, I used to say, of one, but it's probably more like half of one, in that the bank is still trading at around book value. And we think digital banks, particularly those that are listed in the States, are at least 2 times to 3 times book. So bargain to be had. So on the next slide is just reminiscing that we were the first digital bank in the world. Dubious honor, because back in the early days, it was tough to tell people what we're all about and how our model would work. A prophetic statement on the next slide by KPMG, who just happens to be our auditor, thinking that in the next decade there'd be more change in the banking industry. And I would say in the next 10 months, there'll probably be more changes in the banking industry, which of course positions us well, because owning our own software, we can advance and change and evolve as necessary very rapidly. Flipping over to the next slide gives an idea of how our bank works. It's sort of banking in its pure essence. Last year, our assets yielded about 4.6%. Our deposits, we paid about 1.7% in total. yielding a margin of 2.9, a little bit low from what we've been able to earn historically. In the previous years were over 3%, but in 2020, we decided, I think quite prudently, to hold on to a ton of cash in the midst of the pandemic, just to see how things unfolded, which depressed our spread a little bit, and that we didn't earn hardly any interest income on the 420 odd million in cash that we had mostly on deposit with the Royal Bank at the time. The margin gave rise to a $54 million net interest income that dropped to core cash earnings of 27 million. Flipping along, as Kenrick said, it's a B2B model. So both on the asset and liability side. On the liability side, we raise deposits through partners. And back in the early days, that meant expended a bit of shoe leather in going across Canada to small, tiny towns and enlisting stockbrokers and financial planners and insurance companies to use our telephone modems and hitch up with us and sell our deposit products. Since that time, that market has evolved and evolved. So it's a well-functioning market that most of the small FIs use. And of course, the internet is how the data is now delivered. When we noticed that the market was getting somewhat competitive as opposed to what it was in the early days. In the early days, I was happily raising deposits at less than government Canada bond yields. But as more and more FIs came in, it got more and more competitive. So we decided to open up another channel, which is kind of an unusual one, but it just illustrates what we're able to do with our software. We developed a custom banking package for the insolvency professionals across Canada. We delivered it to them, and in very short order, they signed up with us. And so most of the insolvency firms in Canada now bank with us. And that's a nice new source of zero cost deposits. Right now it's over $500 million worth of deposits. So it serves to keep our cost of funds low. There's a theme that you'll notice with our bank, and that is we try not to compete on interest rate, either on deposits or on loans. We try to compete on service. So what we do, we use our software to provide a special sort of service to an industry to solve a problem they might have. So they're entitled or encouraged to deal with us rather than the other guys that might even be paying a higher interest rate. On the loan side, we created a digital way of financing point of sale companies. That's almost a beautiful analogy to how we raise deposits, in that these points of sale companies send us loan and lease receivables each day, millions and millions of dollars. They reside on our books until they go into arrears. So if there's a hot tub loan that goes into arrears or a cosmetic surgery loan that goes into arrears, after 90 days, we put it back to the vendor of the original loan and drive on. That's why in our bank, you don't see loan losses, you don't see arrears, all those usual things. And thankfully, we've been spared the need to have a collection department over the entire existence of the bank, which is now decades. We've also got a wonderful business that basically I started in 1977 with Bank of Montreal, and it's called commercial mortgages. And sometimes in the cycle, there's a whole lot of public sector in there, hospitals, school boards, municipalities that are building things. And right now, we've got a resurgence in residential financing as folks leave the major centers and buy homes in the outlying areas. Flipping on to the next slide. Yeah, this one, it just talks about the insolvency industry that I talked about a bit earlier, $508 million as of the end of the year, October 31st. The next slide is the bar chart showing the growth. And if you look at the bottom of the right-hand side, that chart showing the zero cost deposits growing. Most of the bar is the insolvency professional deposits growing. The top is the holdbacks that we require from our point of sale partners. So that's our cheap money, zero at this point in time. And on top is the bar chart of the traditional GIC type funding that we get from the 120 or so deposit brokers throughout Canada. Next slide shows a nice lady there talking about the point of sale program. As I say, that's a fantastic business for us. Very, very low risk. In the midst of the despair in 2020, when folks thought the world might be coming to an end or the sky was falling, and our ECL models, our expected loss provision models, kicked up provisions, whereas the other guys were kicking up enormous provisions. I was happy to tell you that we had 100 million or so in holdbacks in cash from our point of sale program, and our models in the worst case scenario kicked up a $30 million provision. So we had more than 3 times what was necessary to look after the worst case that people had seen in maybe in history or a very long time. Looking at the next slide, it just shows the asset breakdown. Point of sale, of course, is growing rapidly again. Folks are out there buying things, so we're in a rapid growth there. The other side of the pie chart shows the gray is our cash, and that pie is sliding in now. It used to be 420 million. It's sliding in as we're using the cash to fund the loans and the lease receivables. Flipping over to the next slide, this illustrates our low risk model, low credit risk, extremely low as compared to the market. The orange line is the market, and the blue line's us. Like you can see, generally speaking, we average about 0 for loss provisions. It's kicked up by a model. So you can see it's a little bump back in the middle of 2020 when everybody else hopped up to, on average, to 140 basis points. We were about 12, and then it settled back down again. Liquidity risk has never been much of a problem for us in that we have such an expansive deposit gathering network, and it's somewhat counter-cyclical because the worst, when the economy is in a downturn, of course, there's more insolvencies. That means we get more deposits in that area, and low operational risk in that we use our own software and don't have pesky things such as instant tellers and such to maintain. We have extremely low operational risk too. So the next slide is where it all kind of comes together. Just shows that 31% core cash earnings growth rate, compounded growth rate over the last 6 years. I used to be able to say 40% because the last year in 2020 was somewhat flat with us holding on to all that cash and having a flat year. But still, I think one of the industry leading compounded average growth rates. This year, where it's pedal to the metal, the bank's growing as more rapidly than we ever have. Point of sales come back furiously. And of course, we've got all this construction going on with the in the hinterlands surrounding major centers as folks are heading out to Kitchener, Waterloo, Cambridge, Guelph, Paris, Brantford, Stratford. We've even got projects going on in Stratford, a beautiful place. So how do we keep growing? Well, we love paying next to nothing for our deposits. So we've got all kinds of new innovative ideas in the skunk works of how we're going to raise deposits even cheaper going forward. We've got some ideas that may be coming out fairly soon that we'll be able to talk about. But you rest assured that in our model, we don't like to be bragging about how much we're paying for our deposits like some others do. I once said to the CBA before I got my bank license, I was the first in 18 years to get a bank license. I said, you'll never see me up in on TV with some orange bar charts saying it's your money with a bar chart way up here and all the rest of the banks way down here. I like to be way down there. Loan growth, obviously, the rebound is working well for us. So that's coming back fast. Point of sale program, we'll be expanding it. We've just brought on some more partners, and we are looking into United States now in that seems like a wonderful market to bring the point of sale program. So we've got some contacts over there and we're developing relationships now, maybe 10 times maybe more, bigger than Canada, and easily accessible for us, just being somewhat north of the border, and having offices there with our cybersecurity firm. I share an office with Tom Ridge, Governor of Pennsylvania, former head of Homeland Security in Washington, D.C. For a physical location. And we've got a new product we call Instant Mortgage, which we're bringing the point of sale idea to the real estate market. We've got some big expectations for that. Accretive acquisitions. We just did one in the cybersecurity area, acquiring a company called Digital Boundary Group. I'll talk to you about that a bit later. We're on the lookout for more, but right now we're growing so rapidly with organic growth that looking at other FIs for an acquisition isn't really at the top of the list anymore. So let me have a look here. This next slide shows you is about the instant mortgage. Basically, as I said, we're taking the idea of point of sale to the sales offices of the home builders. And we're saying, hey, if your client comes in the door, they haven't got a mortgage, they're not using the old traditional route, walking down the street to negotiate with the branch manager to get a pre-approval on a mortgage, or they don't know how the deposit broker network works, no problem. We've got an app for you. You just help them fill it out, hit the button, bingo, it comes back approved, and there you go. We feel good about it because we've put a roof over the head of likely some new Canadians that are not all that familiar with how things work, or those that just don't want the hassle anymore, that they prefer the convenience over the long drawn out process of the traditional way to get a mortgage. So we're really happy about that. As usual, we beta tested this. It's our usual modus operandi. We try to pick the biggest we can think of, so we get a really good test. And the Corlucci Group, thankfully, acted as our beta testers, one of the larger home builders in Toronto, and Intuition, a big, huge sales office that the home builders use, has been working with us on it too. So we're happy about it. We think we've got all the wrinkles worked out and we're ready to launch. Next slide is what I was talking about. This is where you get two for the price of half of one. You get DRT Cyber 2. Now, DRT Cyber, development of radical new technologies, or my initials, who knows. We created, as I said, to look after the bank's cybersecurity needs, and also, of course, provide cybersecurity solutions for others, other FIs, other corporates, and government entities. The next slide just gives a quote from Tom Ridge, who's well up on cybersecurity. It's his baby now. He's an expert on that area. Huge, tremendous market, and it gets bigger every day. What we say is if DRTC is not protecting you, you're not protected. And that's getting to be a reality. In the States, they just had a breach in a Florida water treatment plant where somebody turned up the chemical levels. Right now, our customers include about 440 of the who's who, United States and Canada, and a lot of those utilities. We're there to show them how that can't happen again. Looking at the next slide, just going to move it over a bit here. To make it all happen, of course, I needed to bring an expert on, and Gurpreet Sahota, who was talking earlier before we started this presentation, started out with the UK military in cybersecurity, came to Canada. They head up BlackBerry's cybersecurity. He was chief architect of cybersecurity for about 16 years, keeping BlackBerry safe. And when I introduced him to Tom Ridge, the creator of Homeland Security, Tom said right away, it was only your BlackBerry that we would use because no one's ever hacked a BlackBerry, and that's thanks to Gurpreet. So Gurpreet is Chief Operating Officer, heads it all up. Tom is the chairman, and Avery is the other fellow I was referring to earlier that was a senior software engineer at Google, and he's back with me. He started out with us back in his university days, and he did a little time here and there and then came back to help out. So one of the products we've got, I'm sure you guys know because we announced it about 3 years ago, it was the first digital vault, and it's got a ton of applicability in this industry. As Gurpreet says, it's where a corporation or a government keeps the crown jewels. Tom Ridge said, where we'd keep the plans to our next fighter plane. And it's extremely applicable to the cryptocurrency industry. Flipping along, sort of summarizes DRT: detection, assessment, and protection. So literally what do we do? Digital Boundary Group has these 440 customers. So periodically it'll do a penetration test to see if it can hack in, to find out where the weaknesses are. Up until we acquired them, that'd be it. They'd say, okay, we found some weaknesses here or there. Now that they're part of DRT Cyber could say, no problem, we'll patch that hole for you. Oh, you've got something you really don't want people to steal, it can go in the vault. Or how would you like to have a little heads up if someone's probing your systems just before they even get in? A little heads up with, we call it a machine learning sensor, so that if someone's tapping on the door, or if there's an unusual data flow, or there's some passwords been failed, maybe in a jurisdiction that nobody's really supposed to be at, say the Ukraine or somewhere like that, our system will say, hey, it'll sound the alarm. And it might not be a real alarm, but it's nice to know before the criminals make their way in. So a full solution of cybersecurity products we're bringing to market. We're cross-selling it through our existing customer base. So that's how we're going to grow it. Number two, continue to grow DBG's business. Tom Ridge is already engaged in that, introducing Digital Boundary Group to his Rolodex of the who's who. Expanding our services to Digital Boundaries Group and bringing the vault on board. Possibly there's a few more acquisitions. There's one I really would like. It's just kind of justice that they come back home. They're guys who used to work for me too and sort of went out on their own, but I thought it'd be nice if they'd finally come. So, ladies and gentlemen, I'm sort of wrapping up here. Last slide shows you some of the ratios. I guess probably the most important one to know is that we got a ton of capital right now, but we are burning it up rather rapidly, in that we're growing at warp speed. Pardon me using that analogy. Flipping on to the market facts, trading at around book value. Our book value is probably exactly that, around 10.97 right now, or maybe a tiny bit higher. So still a bargain, and I'll just stop there.